All right, let's take a look at this next question dealing with sale of asset, disposal of asset, and whether or not the business made a gain or loss at the time of sale. Here we have an asset, right? We're told that the asset is worth $30,000. That's the asset cost. It was originally worth $30,000, which means it was purchased for $30,000. But over the useful life of the asset, right? The asset accumulated depreciation, which means that the asset lost value of 27,500. The asset's value was reduced by 27,500, and that's what we call, that reduction in the value is what we call accumulated depreciation. With the asset cost and accumulated depreciation known, we are able to calculate the net book value. Okay, the net book value is determined by taking the asset cost and subtracting the accumulated depreciation. All right, which, as we know, is asset cost $30,000 minus accumulated depreciation 27,500. This gives us a book value, a net book value of 2,500. This is the worth of the asset. This is what the asset is worth on the day that the owners decide to sell it. So now, how do we know if they made a gain or loss? To calculate the gain or loss, you take the worth of the asset and you compare it to the cash received. So the cash received, right, minus the worth or book value, which in this case, the cash received was $3,500 minus the book value or the worth of the asset, which is $2,500. We see that the asset is only worth $2,500, but we receive cash of $3,500 for it, which means that this business had a gain of $1,000 by selling this asset.